Well, the next company on our radar is the company that's into building products, as well as they have a small division that's into yarn making as well, Visaka Industries. The company's stock, remember, is up close to around 30% odd in the last couple of months, so it's participated in this bounce that we're seeing. To understand what's going on, how is the past quarter, how are things shaping up, we're joined by Mr. Vamsi Krishna, the joint MD of the company. Hi, Vamsi. Always good speaking to you. It's been a while since we chatted last. Let's focus first on your core business. That's, the bread and butter business, the asbestos sheet business. Give us a sense about price increases. There is some market talk that maybe your price increases that you took in the first quarter was lower than what the industry took. Could you clarify on that? And also, what are the pricing trends on this division going ahead?
Sure. Great, Nigel. Happy to be here and talk to you as always. I think, first off, we're doing well in terms of the AC business. I think first quarter was good for us, even though I think there were a lot of pressures in terms of the raw material pricing that we are seeing. But I think overall, I think as a company, our prices have been good. Compared to competitors also, our margins, if you see in the first quarter, we are actually good, if not say better than our competitors. We are actually done well in terms of our margins as well. So I think things are on the right track.
Okay, all right. So got that. So you're clarifying that the price increases is in step with what the market has taken, and you're sounding pretty bullish. Focusing on the market share then. What's the outlook from here on? I'm looking at your presentation. I think market share was around 18%. Where is it headed from here? And how will you weigh the two? Will you go for volumes? Will you go for market share? You're telling us that pricing's in line. Go ahead.
Yeah, I think always a good chat with you regarding our market share, and happy to share with you that our new expansion in the north, which is bringing in almost 1 lakh tons in addition to our existing capacity. So we are looking at a good growth this year, actually. In fact, almost a 10% growth as a company last year to this year. And in terms of market share, Nigel, I think this year we'll be adding 2% of the total market share as well. So we'll be looking at a good growth for the company in this division.
Just to clarify, this 10% growth you're referring to is only for this division? Is it the volumes that you're talking about?
Yes, volumes in AC for Visaka Industries.
Got it. And 2% market share means you're going to go from 18 to 20%.
Yes,
okay.
Yes.
Just want to clarify that. Got it.
All right. Hi, Vamsi. Good morning. Thanks for joining us. This is Pavitra. So, we have seen that you've undertaken some capex in the roofing space. We've not really seen the rest of the industry do this in a while, in around a decade. So, can you take us through A, what was the rationale, and B, are you looking at any further capex in this space?
Sure. Hi, Pavitra. I think in terms of our market share and in terms of our overall arrangement, we have been predominantly more focused on the south. And there's been good growth in the north and the eastern markets that we are observing. That's the reason why we wanted to expand further in that belt. And I think the rural market is quite bullish in these spaces in terms of the northern markets. So that's the reason we took an increase in that area. I'm not seeing particularly a big bump in the roofing investments per se. We are concentrating on our green buildings division in terms of our further expansion. So we are announcing in that area.
Okay. So in roofing business, no further capacity expansion. What about raw materials? You get, I think, fiber from Russia, from Kazakhstan as well. Issues are getting sorted out, ironed out there, or are you still facing some supply side issues?
I think everybody's trying to take their advantage in terms of the market and global scenarios, Nigel. I think definitely our supply end have issues in terms of cost increase. I think overall, not just in terms of supply, but logistics as well. And as a company, I think we are very well geared up to offset these, but we will have some impact in terms of the rising input costs. But we are trying our best to offset this.
All right. We also wanted to sort of get you in and ask about the textile business. It contributes around 18% of your business. So what is the plan over there? Is it likely to go up, the kind of contribution that you're seeing from textiles? And what is the growth that we can expect for this year, just for this division?
Yeah, so textiles division is doing well as in terms of the overall market. I think we entered into the sustainable yarn space, which has been quite interesting in the domestic and global demand front. We're expecting almost about 20% growth in the textile division compared to last year as well. I think the sustainable yarn business is growing quite well. In addition to that, I think happy to announce that we are expanding our VNext division as well. We are setting up a 5th plant for the boat space in terms of market growth. Right now, we are market leaders in that in terms of 2.5 lakh tons overall capacity. We'll be adding another 72,000 tons with the new plant. So we are growing well in that space as well.
Okay, you're growing well, and you say that you expect 20% growth in FY23. So sounding very optimistic on that. Could you also take us through what are the kind of margins that you operate at for this segment?
Sure. I think last year, I think we got good, very good sign of margins, in fact, because of our overall, inventory planning. But I think this year we will be seeing a more stabilizing rate in terms of margins because of the rise in input costs. But I think the important point here is that the growth is there, the demand is strong. I think the temporary price pressures in terms of supply chain should ease out as we go forward. So I think all in all, I think we're more composed in terms of growth rates. Yeah.
Okay, as a consolidated entity, Vamsi, what kind of a revenue growth are you looking at? You've given us division-wise. As a consolidated entity, what kind of revenue growth and sustainable margins? First quarter, obviously, things were difficult, so consolidated margins came down to around 13.5% odd. What would be the margin band you're looking at for the consolidated entity?
So I think, Nigel, definitely, I think the pressures are on. I think we'll be looking at a slight, offsetting in terms of the pricing and the margins that we have. We will stabilize, I think, as we go forward. I think Q2 is unfortunately the lowest period in terms of the margins and in terms of volumes. So we'll refrain from giving a concrete answer on that. But I think definitely we are on the right track in terms of balancing out our rise in input costs and our price in terms of selling price. I think in terms of turnover growth, I think definitely a minimum of 10 to 15% is what we are expecting further on overall as a company as a whole.
Okay, all right. Very quickly then, before we let you go, Vamsi, you're doing some business. I think it's not in the listed entity, but that EV mobility. You've also jumped on the electrifying aspect of things. And I think the two-wheelers is what you have launched. What's the sense out here? Will you be putting more money out there? At some point of time, will you look to bring that EV business into the listed entity, or will you keep that separately totally?
I think, Nigel, before I jump into the e-mobility space, just want to share with you that even in our listed entity in the solar, we've got our
chargers.
ALMM approval, which is, I think, in the news of late, where all the solar is getting a big uplift. So happy to share with you that we are part of that, and we are getting good approvals in Dubai Authority of Energy as well. So there's good growth in that space as well. Coming to the e-mobility, I think, yes, definitely it's independent of the listed entity as now. I think the synergies are quite different. It's in terms of what we are able to add value in terms of the market. I think there's a huge scope in motorbike segment. Everybody's concentrating on the scooter electric vehicles, but I'm trying to create a difference in the motorbike electric space, and I think we've got patents in that company as well. So there's, I think, a lot of good things to look at and uncover in that space.
All right, Vamsi, we'll leave it at that today. Thank you very much for joining us. So the overall turnover could go up around 15 to 20% for the year. You're not giving us a margin guidance that we can hold you to, but you also do sound quite optimistic on the textile space, saying that we'll see around 20% growth for the full year. With that, we're going to get into a short break on the show. But as we do that, here's a quick reminder for our viewers. It is that time of the year again. Money Control Pro's financial freedom offer is back and with added benefits. So you can get a Money Control Pro subscription